Canadian investors are using ZSP over any other ETF for exposure to the S&P 500 index. Institutional investors, investment advisors, and DIY investors have all been trusting ZSP with their investment dollars since the fall of 2012. ETFs provide instant access to a portfolio of stocks to an investor in a single, cost-efficient trade. For an investor to own the entire index would require institutional-level trading systems and expertise. To accomplish this, an investor would have to buy 500 stocks at a time, and then as the market moves, it would constantly have to rebalance those 500 stocks several times a year. ZSP simplifies this process by aiming to provide instant access to the 500 stocks in the index in a very easy and low-cost way. Before we get started, I just want to remind everyone that this information discussed today is not intended to be or construed as investment advice. Please consult a professional advisor before putting a loonie in any of these financial markets.
The dirty secret is that no one's ever going to get paid back.
People have the shortest memories when it comes to investment.
We just got to get Keith into Bitcoin.
Hey, there's a bubble. Welcome back to the Loonie Hour, episode 160. As always, joined by the three amigos, Boomer, Keith Dicker, Ice Cap Asset Management, Rich Diaz. What's going on?
Hey guys, I think this is going to be a spooktacular episode today.
Boo.
It's Halloween. Come on. Rich is laughing, right? I knew Steve would get it.
Because I knew Steve was going to not like that.
You know what my wife told me yesterday? She's like,
Spooktacular.
she calls me, she goes, "You're not going to like this one. I just heard someone call it Spirit Day because not everyone celebrates Halloween."
What? Everyone celebrates Halloween. It's like the
I never heard that.
quintessential.
I don't know if that's a thing, but some people were calling it Spirit Day.
It is the quintessential non-denominational holiday for children. Who's taking this away from us?
I think it's fun. A few years back down in Bermuda, it was Halloween, and I was in this pub and I was walking through, and is a group of like these big guys there, and they look at me and they started howling with laughter, pointing. They're like, "Oh, it's a nerd! It's a nerd!" You know, they come over, they get their photo taken with me and stuff, and I high-fived them, and then I left. And the best thing was, I was just on my way home from work. I stopped in for a pint.
That's a terrible
It's true.
joke.
Your art's back.
My art is back. And sadly, so are the Canadians as they return to form and lost 8-2 the other day. We're
They're
not going to
bad.
go 82-0, sadly. But yeah,
Who's
all
who's
good.
the number one pick this year?
I
Should just
don't know
start
idea.
tanking now.
Yeah, we should start tanking again now. No idea. It's happy Halloween. It's actually not going to be Halloween when people are listening to this because we record this on a Thursday. So, but nevertheless, yeah, it's my favorite holiday. I love all the costumes. I like the really, really inappropriate costumes. Those are my favorite.
Favorite
I'm a big-
holiday?
Sorry?
Favorite holiday, really?
Yeah, I guess so. That and Christmas.
Well, I'm with Steve on this. Halloween's your favorite holiday?
I don't know, like candy, scary movies.
Are you trick-or-treating tonight?
No comment.
So that's one big kid.
That's right. Anyways,
Alrighty. Here we
let's
go.
get to it.
Here we go.
All right. Well, I don't know. I guess, Boomer, there's a lot in markets. We're not going to get into the politics of it, but I think a lot of markets right now are kind of in sort of limbo, waiting to see what happens with the U.S. election. There's a lot of positioning, obviously, that is playing out based on who markets think is going to win. But I think we'll kind of it'll be interesting to see. I think we're in for quite a bit of volatility over the next 3-4 weeks, but it's a little bit quiet today. But I got a little bit on some stuff that's happening in the politics of housing here in Canada. I want to briefly touch on that. The UK budget, there's some big news there. I think there's a lot going on around the Canadian dollar with the BOC, some more soft data coming out of the GDP stuff. And then, Rich, your favorite, Germany. There's a lot going on over there that we can touch on this week.
Yeah.
So,
Sure.
yeah, we always got enough to fill the episode.
Where do you want to start?
Oh, I was going to start on the GST stuff. So
Okay.
Pierre Poilievre again, assuming the polls are correct, good chance he will form the next government, but we shall see. He has unveiled that he will be removing GST, the 5% GST sales tax on new homes under 1 million in this country. It was fairly well received on I think both sides of the political spectrum, truthfully. So I think that's a big news. I mean, I think if you're following along, as of right now, well, the GST was always supposed to be temporary, particularly on housing, and it just, like any tax, once it's implemented, it never really goes away.
Wait, rewind. What do you mean it used to be it was supposed to be temporary?
It was when it was introduced. I don't know how long ago it was introduced. What, Keith, you would know. You're old enough. How long ago was it introduced?
Boy, I think the GST late 80s, early 90s.
Huh,
One of
I
my
did not know
first
that.
jobs was working for the Revenue Canada GST office.
No, it wasn't.
Yeah, well, it's a
You
true story.
You suckled the teat of Ottawa, Keith.
I was in university at the time, so it was a co-op program, so you had to work every second semester. And one of my jobs, was working there in the office. So
Okay, GST was introduced in 1991. There you go.
Okay.
Yeah.
Sorry, I did not know that.
Why don't you research how many GST refund applications got screwed up in that year?
Sorry, Steve, I didn't mean to interrupt you. I just didn't know that.
Anyways,
Cool, please.
so
please.
he's removing on new homes, assuming that he gets into power. And yeah, I mean, as of right now, 30% of the cost of a new home is government fees and taxes. So one way to sort of alleviate some of that burden is you got to get government out of housing. If they're taking up 30% of the cost of a new home, I mean, that's utterly insane. Just to give you an example too, so we had some good data from friend of the show, Mike Moffat, post that. So just kind of showing like where governments, how they've been really milking the housing sector to drive tax revenues, right? And so if you look at Toronto, so the development charges for a single family detached house, they increased from $12,900 in 2010. So basically the permit fee, essentially the development charge was $12,910 in 2010, and it's now today it's $141,000. Right? So I mean, it really shouldn't come as a surprise. I mean, it's the same thing for condos; they're 30%. And so, and the other thing that's interesting is we've talked about this is basically what governments have done, right? Like, the old boomers like Keith, they don't like to see their property taxes go up. That's not politically popular. If you've voting for your local municipal government, you want to keep your property taxes lower. So what they've done to sort of shield existing homeowners from that burden, and existing homeowners are typically the ones who go out and actually vote, is they've actually just shifted all of their revenue side onto basically new construction or development charges being one of them. Because you think about it, if you're passing on the fees to a developer, the average person has no idea. They don't follow what a developer is paying for new construction and permits and fees, etc. So if you look at Mike Moffat put this one out. So the development charges and property tax on a typical one-bedroom condo in the city of Toronto. So if you go back to September 2010 versus today, September 2024, or basically, property taxes on a one-bedroom condo were $2,100. Development charges were $4,900. So a little bit of a difference. Today, the property taxes are $4,600, but the development charges are $48,000. So you can see that clearly they've decided to not really raise property taxes that much, and they've decided to just basically play catch up on the development charges through new housing.
That's crazy. Also, what's weird is it's funny because people aren't those development charges sort of passed into the purchase price.
Mm-hmm.
So people will actually borrow money in order to assume those development charges, right? Like passing power through, like, you go right through, right? Basically,
it's insane to think it doesn't pass through. I mean, like,
right.
if you're,
That's what I'm saying.
Yeah, like if you're a
And so
developer going out to acquire, a piece of land and redevelop, like you're looking at all this prior to. You're saying, okay, I know my fees and taxes are going to be about 30% of the cost. I know my land is this. This is what the seller wants me to pay for the land. This is what my construction costs are, and this is what I need to profit. Like it's all relevant. And so if it doesn't pencil, it doesn't get built, and that's kind of where we're at today. And so yeah, I mean,
Those numbers are pretty scary.
it's
spooky.
crazy. They're very. Oh God.
But they are absolutely. So if the GST is removed,
Mhm.
that will provide some respite or
I think what I
be
see,
lower costs somewhat.
yeah. So what
maybe.
I see day to day is, especially today, right? Like everybody knows this. This is no secret. Like new housing is so expensive. Like the cost of new housing, it's so expensive. It's so much. It's now become so much more than resale prices, older inventory, that they're actually like they're no longer able to even be competitive. So the gap, right? So let's just say new construction is 10 to 20% higher than a resale product. You're no longer competitive. And so like if you're not competitive, the buyer says, well, I'm not interested. I'll just go buy the resale property for 15% less. And so then nothing gets built, right? So you have to make, if you want more supply to come to market, you have to find a way to make new development more appealing. And one of those is to basically lower the price essentially by 5%, right? The GST. So I see that quite frequently in my business where they say, well, listen, I can buy this 2-year-old townhouse. It's basically new. It's been lived in for, less than 2 years, but the GST has already been paid. Or I can buy the exact same product, which is slightly higher, plus have to pay the additional 5% on top. I may as well just go and buy the 2-year-old townhouse. And so, yeah, I think it ultimately should make new housing a little bit more competitive. I don't think there's any sort of panacea for fixing Canada's housing crisis. I mean, clearly, yes, you need to get government fees and taxes down, but it's not the
Isn't
be
it
all end all. One
like we
policy
don't
is
pay
not going to
taxes on?
change.
Oh, sorry. I was just
Yeah.
gonna say we don't pay taxes on vegetables because it's like an essential, right?
Mhm.
It
Mhm.
strikes me as odd we pay taxes on housing at all, really. I maybe call me naive, but well, I am naive. But you know what I mean? Like housing is an essential part of your sort of consumer basket. You need somewhere to live. It just strikes me as weird that you would try to generate revenue from the thing you're trying to improve the supply of. You know what I mean? Taxes are meant to either generate, yeah, that it's just a weird. Anyway, it's just like I don't get it from its first principles. I guess is the part that I'm confused about.
Yeah. Well, I mean, Keith, coming full circle, basically, it's funny, right? Because it's like the municipal governments are then complaining and saying, well, you want us to approve all this new housing, but we don't have the funds to build all the infrastructure, sewer upgrades, water upgrades. And so they're like, well, how do we pay for this? And so it's coming back full circle, which is
Yeah, but wait a second.
governments are
10x.
broke.
10x though. That's the thing I think people need to like sort of realize. Like just to repeat the numbers that you said, which is what September 2010 it was 5,000 development charges and 14 years later it's 50,000.
Yeah. Yeah.
I'm
Yeah.
sorry, infrastructure costs did not go up 10x in that period.
Well, I mean, yeah, I think ultimately it's Keith, maybe these guys need to be more efficient in their spending
Well, it's
and their
all a bit
budgeting.
frightening when it's a bit frightening as you start to hear the numbers. I think, if you were starting your own country today from scratch, you had that blank sheet of paper, and you're trying to come up with your tax policy and plan, would it look anything close to what we have today in Canada? No, not even close to it. It's just something is this like this monster of a tax policy that's been, just growing over time, like the blob that we talk about. And we've now reached the point where it's just not manageable. Nothing makes sense anymore. So I always, I do chuckle, when I hear, this group is going to do that to make it a little bit better, or this other group think we should do this. These are all really small, minor changes. on the fringe. And, people listening will say, well, what should they do then? And I don't know what the exact answer is. But I think if everyone would agree that what we're currently doing now doesn't work, I don't mean, 5% of it doesn't work. We get 90% plus of the way money is being collected and spent in Canada. It doesn't work anymore. And the same with the UK, same with the Americans and everyone else. And I just think that, we either have to sit down and say, hey, let's figure this out. Let's make some real changes here. Or alternatively, which I think is what's going to happen, we're just going to hit a wall. Something's going to break in two in the middle of the night, and then it'll get fixed for us. And I think that's where we're going. So watch out for the Rich.
Yes.
Don't get frightened by the bumps in the night.
Well, this
Yeah,
might
anyways.
scare people, but there are other ways to collect taxes. And one example comes to mind is Ireland, because Ireland has focused on taxing consumption rather than investment or income. And as a function of that, their productivity is actually really, really increased. And yeah, so anyway, there are different ways to do it. But sorry, Steve, you can.
No, I was just going to round that out, basically. I mean, it just kind of comes back to the whole thing that, ultimately housing is broken in the country. And I don't think there's one or two solutions that are going to fix this in the next few years. I think that it's a decade-long problem that will take 10 plus years to fix. And we saw that so many things have gone wrong over the last 5-10 years. I mean, obviously we talked on the immigration side a little bit last week, right? Where, hey, we let in too many people came in, 1.2 million people a year for the last couple of years. And, now we got to shut the gates, but the horse is already bolted. And so, yeah, it's going to be a while to fix, but hopefully this is, at least I think we're getting on the right track in terms of policy. So we'll see.
So maybe that nightmare is over.
For now. Spooky. Canadian dollar. That's the next nightmare, Boomer. Touched.
What's happening? What's happening with CAD these days?
It's
Canadian
dying.
dollar. It's sank just below 72 cents US this week. So first time in more than 4 years. New low point for the Canadian dollar, which has been a lot of the concerns. We have a lot of the feedback from the podcast, a lot of the comments, the emails that have been coming in. Have been around, hey, listen, Bank of Canada is going to be cutting. That's great. My mortgage is going to get a little bit cheaper and I'm highly levered, But, what about the Canadian dollar? I mean, how much can these guys really continue to cut rates if the data in the US holds up and the Fed doesn't move maybe as much? So we've had a lot of conversations around the Canadian dollar and, it's kind of retesting those lows. So, Rich, Keith, I don't know if you have any further thoughts on that, but it's I think it's the news story this week.
Well, I have one as an old thought, which is it just reiterates the importance of crude oil to our economy and to our way of life and to our standard of living and to pay for our welfare state and all these silly programs that we insist on funding with a blank check. If it wasn't for crude oil, our current account balance would be 5% lower than it is. And we would have the massive we'd have a much more of an external devaluation than what we're currently facing with. So what's an external devaluation? That's the currency. And that's what we're seeing. And if it wasn't for that huge sort of inflow of hard currency, Canada would be totally screwed and our currency would be much, much, much worse off than what we're doing. But I think that's sort of the bigger picture. The smaller picture is that we're just facing sort of an interest rate differential. And that's what you see. And hopefully, Steve, we can share the chart, which is that
do you want to touch on that a little bit more for our listeners that are maybe less in tune with that?
Yeah, I mean, the theory is like interest rate parity, which is, a grandiose theory that may or may not work. And there's issues with that. But basically, the point is that you should be sort of indifferent between carrying one currency and the other currency adjusted for some kind of interest rate or time value of money over a specific period. And when your interest rates fall relative to another country, in general, again, this is sort of a broad stroke theory, your currency will sort of track that. And for Canada, specifically at the short end of the curve, it works really, really well. And we're seeing that the Canadian dollar keeps falling because of the widening spread between the 2-year bond yield, which is a central bank proxy for what they're going to do, is starting to widen. And so now we're at 100 basis points. So that's a 2-year spread between US and Canada is 100 basis points. And lo and behold, the Canadian dollar is starting to weaken and weaken. And we got good US data, ADP. We'll talk about that later. But to me, that's just, the Fed is going to be forced, I think, to be hawkish going forward unless the US really, really capitulates from an economic standpoint. And we know Tiff Macklem came out and said, we're going to stick the landing. and so that's what we're seeing. And that's why I think one of the reasons why there's been such a huge short-term movement in the Canadian dollar.
So he was also in the, I think he was testifying in front of the finance committee this week.
Yeah.
So it was my understanding that they asked him about the Canadian dollar as well. And, he basically said, to a lesser extent, that he was not worried about it, that there was room to go basically, before they have to worry about sort of monetary policy, really impacting the Canadian dollar and importing inflation, things of that nature. So I think Tiff sees there's more room to go, and so I don't think that's going to prevent them from moving again here in December.
But I think let's give you some credit, Steve. That's exactly the point. You mentioned, I think 6 months ago or last year, that the Canadian dollar would be the sacrificial lamb. And that's, in my view, exactly what we're seeing. And I think that's, Tiff Macklem would never come out and say it, because not only is it's not his job to do that, but I think he would want to defend his pension. But the point is that is what's happening, right? They are basically sacrificing the Canadian dollar in order to make it easier for the mortgage renewal cycle to go through, et cetera, and then for banks to run, for the government to run budget deficits, on and on and on. I mean, that's I think that's the quid pro quo, and I think the Canadian dollar is going to go much, much lower.
Well, yeah, I mean, we think we talked about it a little bit last week, right? Which is just, I view it as, I think they're going back to the well, right? I mean, policymakers are going back to the well, which is try to squeeze out any sort of economic growth that you can from the housing market. We're seeing that, right? We're seeing 2-3 weeks ago, Christopher Freeland says, hey, jumbo mortgages, that are going to be government insured. We need to go and borrow more money for housing. And then you see Tiff Macklem that says, listen, we're cutting rates, and, we're going to be watching the housing market for an increase in activity. And by the way, our monetary policy report suggests that residential investment should grow by 6% next year. So, to me, it's kind of, watch what they do. And so I think what they're trying to do is at least get housing up off the ground. And that seems to be the only way you're getting any growth in this country anymore. Obviously, it's completely backwards, but.
I mean, so first of all, you're never going to have the central bank comment on the currency unless there's a crisis taking place. So we shouldn't be surprised for him to say, hey, we're not worried about it right now. It's not a function. It's not a concern. It's always a concern, because that's what you're watching. The other good news, the move, I think you said Canadian dollar is at its 4-year low. I think you said something like that.
4-year low.
Yeah. I mean, so the good news with that, it's been a gradual decline. It hasn't been a specific, 2-3% one day oomph, like that happening. Because if we do have a gradual change with the currency in either direction, whether strengthening or weakening, that's okay. The economy will adjust to it. So will the banks and all that stuff. The other thing with the Canadian dollar weakening a bit over the last week, especially, it hasn't really been a weak Canadian dollar story. It's been a strong US dollar story. So everyone's been weakening over the last 5, 8, or 9 trading days. And, that shouldn't be, again, it is what it is. So my point is that we talk about Canada quite a bit, because that's what we want to do. And we acknowledge there are a lot of challenges we are facing that could potentially push us into a crisis. But as of now, that is not being reflected in the marketplace, right? So that's good news, right? We don't want to, the day that we are rapidly moving in one direction or the other, then it's okay, let's try to figure this out still. So again, that's where we are today. We talk about frequently how other countries are experiencing concerns. I know Rich is going to talk about the UK here in a little bit as well. But for Canada right now, don't confuse the decline right now as, hey, we are in a major crisis. That's not there yet. I do think it is coming, by the way, but we're not. That's not where we are yet. And this should be catching your attention on the currency side.
Is there anything like what do you have a particular view, Keith, on the Canadian dollar? I mean, call it 71 cents today. I know you're a US dollar bull. Are you concerned? Are you?
Well, from a financial market perspective, we are not concerned because we're positioned to make money on a weakening dollar. So, close your ears, Canadians, if you don't want to hear it, but a declining Canadian dollar, we make money. We're okay on that. Just from a pure market perspective, I mean, like all markets, you get support, here and there. But right now, the Canadian dollar, it's finding support, depending on your view on the Canadian dollar, it's around that 139 mark or the 71.5 cent mark, like in that range. And no market will stay in one area forever. It's either going to break on through, so it could deteriorate rather quickly from here, or it could appreciate, quite quickly. So, this is Thursday. You're watching this on Friday. We recorded on Thursday and all that. But Friday, tomorrow, the American employment, so the non-farm payroll number comes out. And we don't know now what it's going to look like. If that is a very strong number or is not a weak number, then, chances are the US dollar could be strengthening significantly right now as we're watching this or listening. Or it could be the other side of it, if we do have a weak a number coming out. So again, everything is set up, I think, right now, not just for CAD, but for all the currencies, to make a very abrupt move in one direction or the other. And we got the American election, coming up on Tuesday, of course, and that could impact markets potentially afterwards. But yeah, Steve, to answer your question, we're positioned to make money on it because that's where we expect it to go. And I think longer term, unless things improve dramatically somehow, I think it's, CAD's going lower. That's what people should expect. A rational person. Speaking of rational people, what do you think, Rich?
I don't want to contradict you, oh dear leader, sir, but the Canadian dollar is at a 4-year low relative to the euro, and it's also sinking so it's a 151, but the last time it was at this level was 3-year low. I screwed that up, sorry. Was March 2021. So it's not just, I know you're right, like in general, the whole dollar space is really, really doing well, but it's also, the Canadian dollar is also very low versus the euro and the pound. So yeah, sorry to
now do it in
scare
Bitcoin.
everybody. Sorry?
Now do it in Bitcoin.
Oh yeah, Bitcoin.
We got a lot of people in the.
But we had
comments.
the Canadian GDP number this morning as well. I think that ties in with this conversation.
Yeah, it does.
Do you want to tie it, Steve? Do you want to tie it in, or Rich? No, Canadian economy.
Yeah, and see, Keith got off that pretty quick.
Yeah,
I
go
can
for
pivot.
it, Keith. Tell us.
I can pivot. So in Canada, we get monthly GDP data, and it takes a while for it to come out and all that stuff. But this morning's data came out. It was for August, right? So we don't have the September number, but the August number was pretty weak. The month before that was revised a little bit lower. So July and August are basically flattish, which is implying September isn't going to be that awesome either. So the Q3 GDP number for Canada is likely going to be, I think it's targeting 1%. I think we share with everyone in that range, which is of course weaker than what we had in Q2. So we talk about the trend, it continues to grind lower and tighter, which comes back to Steve's, thoughts on where the Bank of Canada is likely headed. And then the differential in rates that you were talking about. So, this is setting up for even further weakness with CAD because we're seeing the US data, as Rich can tell us as well. Some data points are still really strong. Some are pretty weak depending on how you're looking at it. But overall, the argument is not there right now that, the US is, falling off a cliff or anything.
Great.
So it is setting up for, continued weakness in CAD.
Ever been abroad and needed Wi-Fi? Download Saily. Tired of telecom oligopolies ripping you off? Download Saily. Want to avoid sketchy SIM sellers at the airport? Download Saily. Saily might be the only travel app you need. It provides an internet connection wherever you travel and saves you money on roaming fees. It's easy to use, affordable, and reliable all over the world. Saily is the modern, seamless way to get connected without the need for physical SIM cards. With eSIM technology, you can instantly activate service from anywhere in the world. No more waiting in line for a local SIM or dealing with expensive roaming charges. Saily offers flexible plans that fit your needs, whether you're traveling for work or leisure. Plus, you can switch between networks in just a few taps, ensuring you always get the best coverage at the best rates. Whether you're a frequent traveler, an expat, or just someone who wants more flexibility with their phone, Saily's got you covered. No hidden fees, no contracts, just affordable, reliable data wherever you go. Visit Saily.com/Loonie Hour for 15% off.
I just wanted to touch on that because, Keith, you posted on Twitter here the Bloomberg news article headline. It says weaker than forecast 1% growth to keep Bank of Canada cutting. Basically goes on to suggest that the quarterly gain of 1% is also a deceleration from 2.1% growth in previous 3-month period. And the data showed an economy that's still in need of more fuel from interest rate cuts. But I think the one thing to sort of touch on this as well is moving forward, Rich, which is, there was a report out from RBC last week after the Feds announced their intentions to slow population growth to zero. In fact, actually outright decline by 0.2% over the next 2 years. So Canada's population is again, assuming that we hit all these targets, and reality is we're probably going to have a new government anyways, but let's just assume that you have a 0.2% contraction in Canada's population growth over the next 2 years. The Bank of Canada's own forecast in their monetary policy report had the population growth expanding by 1.7%. So that's a substantial difference between the two updated forecasts now. So the BOC has been asked about that in recent days, and they're going to say, well, we're going to have to update our forecast. But RBC's modeling anyways, and I think they've got some pretty decent economists over there, suggests that it's going to shave off 1% growth on GDP, just a factor of population not expanding.
Yeah. I mean, not to, be glib about it, but that's why I think I've been going on and on and on about how Canada would have already been in a recession if it had not been for the massive increase in population. Remember, GDP is like, G plus I, so investment plus consumption plus net exports, but it's also productivity growth or lack thereof for Canada and population growth. There's different ways to calculate it, and so the second way I've described how to calculate it's really important. If you have no productivity growth and you have your population growth soaring, then Krista Freeland can tweet about how economic growth is fantastic. The problem is now we're in a situation where productivity growth is still relatively weak. It won't be weak forever, but right now it's weak. And if that population growth number goes down, we might see a contraction in real GDP. The real crazy thing is if we get a contraction in nominal GDP. So even adjusted for inflation, will we have a GDP contract? And I think that, be careful what you wish for, because I think Pierre Poilievre's going to walk right into that cross-check to the face. I think there's a real chance that this guy inherits an economy that has, if not a contraction in nominal GDP growth. Remember, inflation's only 1 and a bit %. So if that continues to fall, plus falling population growth, plus zero productivity, this guy's about to inherit the biggest shit sandwich that any prime minister has inherited in a long, long time. I mean, there's no real other way to describe it. Oh, wait, there's probably a scarier way to describe it, Keith, but it's not good.
That sounds pretty spooky.
Anyway. Sorry.
Hey, Steve is on that train now, the Halloween train. That's pretty good, Steve.
So it would pull out 700,000 workers out of the BOC's forecast, which as of right now, Tiff Macklem says, well, we don't really know or think it's going to have much impact, but I'm sure their models will be updated soon enough, and that will.
Did he say the word I don't really know, or we don't really know?
Basically,
Steve?
he was quoted in a Bloomberg article suggesting that the huge revision from the federal government on their immigration stance might not have any real impact on their projections. And we're like, you really? You know, you guys are expecting 1.7 growth in population going down to 0. That's 700,000 basically people in the labor force that would come out of your modeling. It's got to have some impact. So, you know, I think that's a case. I think you could make a case there for lower interest rates for the BOC. I mean, if you're taking population down to 0.
Population growth. We're not going to kill everybody.
No,
Growth is
population
going
growth.
down to
Yes,
0.
population growth to 0.
I think this Loonie hour math is actually working. You're right, Steve. Yeah, it is going to be.
But I don't want to be like, I know how. Oh, go.
I have a lot of really sharp views on everything, of course, and with central banks and monetary policy, Rich, cover your ears. You too, Steve, because you like this one. Yeah, one ear. I think you can make a case where central banks should not be setting overnight rates.
Ooh, interesting. Okay.
You want them to conduct research on the economy, ensure that banking system remains stable. Most importantly, that liquidity is available in the marketplace. Because if you think about it, everyone's hanging on every single word, from central bankers, because they know everything, they know how to control the economy and all that stuff. They don't. They can't.
Rates will be low for a long, long time.
Yeah, they've never demonstrated, not once since I've been studying this stuff, the ability to control an economy, to control inflation. Like they move their lever around quite a bit. Then every now and then, the squiggly line meets their straight line, and then it's called a success. But I do, chuckle to myself when I say, well, we don't know what effect a zero growth or negative growth in the population is going to have on the economy. Are you kidding me? Of course you would know how it's going to impact. And this is the stuff that just drives me nuts. However, this is the game that we're playing. So you have to play by the rules. We have to listen to them because they can make decisions that can have an impact, on the economy and how people are borrowing, lending, and all that. But again, it's just I just want people to appreciate that people at the central banks, not just in Canada, but for the Americans and Europeans and Japan and all that stuff, like they're no different than anyone else. We're all smart. We have access to data. We become very acute and keenly aware of what's happening. We can make very good guesses, but they're not the sharpest ghost in the closet here. Like they have to come out and go, hey, we don't know what's going on really. I just find it odd that we're placing so much weight on what these guys say.
It's a tough job.
I want you to know, Keith, that there is actually a precedent for what you would call what's known in the academic circles as free banking. And it happened in Britain between in the early 1800s to halfway through. So 1840s or whatever. And basically what you have a situation, there was no central bank and a bunch of private banks basically just charged whatever interest the market would bear, whether it was overnight or otherwise. And each bank would hand over their own paper, right, in form of currency, which is, legal tender, etc. But there is precedent where you do have a very fully functioning, arguably extremely successful financial market and industrial sector that's based off that financial market that has no central bank as the overlord of short-term interest rates. It's happened before. It may happen again, but there is history.
But they have to control the money supply. You have to make sure there is liquidity in the system, right? So that you have things like that happening, and
but not interest rates specifically. Right.
Yeah. I mean, and people don't realize this, but not too long ago, the Bank of Canada didn't set overnight rates.
Yeah.
They let the market set the rate. So that's
how long ago was that?
I am going to guess 90s.
I thought 97. That's my guess. I'll look it up.
Let's see. but there
Drum
is an
roll.
roll.
Go, keep talking.
Yeah. Killer. Oh, by the way,
Oh,
so
96. 96. I was close. I knew it was.
Tonight is Halloween, of course. So don't tell Mrs. Ice Cap, but these little Twix bars, these suckers, I found like a bucket of them in the closet. I think this is like my 48th one of the day already.
Man, I thought you only ate those fancy ones. Unreal
They're all
bars.
gone. I ate them all. Now I'm on to the Twix. So these are good. I like these.
You guys give out the small bars at your door? You cheap bastards.
That's a good
Biggest
point.
house on the block, smallest candy bars.
Yeah, we need to get bigger ones. There's a house around the corner from us. He actually gives out cans of Coca-Cola.
Oh, Jesus.
Yeah, I know.
Oh,
you always
man.
see the kids sitting on the curb of the sidewalk, like a little kid with it just where I am anyway. Like kids don't get a lot of soda anymore in my world. It's just they don't see it, right? And but Halloween night, I see all these little kids. They're sitting in, they're holding on to this like big handful of Coca-Cola, and they're like slurping this thing back. Then you see them like boom, they turn in like the zombie wakes up, and then they're flying around the street.
Just start giving out like energy drinks at your door.
Anyway, here's the Twix.
There you go. Twix bet next week. Speaking of Britain there, Rich.
Oh, yeah.
Lot going on in the UK bond market once again. I feel like we've already seen this story play out.
Rich,
But,
you gotta use your British accent.
No, I can't do that.
Rich, walk us through. You were just there. What, last week? You're back. But tell us what's going on in the UK bond market.
Well, I mean, I think we should wait a couple. Sorry, this is a bit of a cop out, but like I think we should wait a couple days for the UK bond market to properly digest what's going on. I mean, the reaction was that gilts sold off, so bond prices go down means yields go up. But that, and who knows why? I mean, I think I know why. It's because they basically increased taxes by the most since 1993. Which is incredible, like a whopping, I think, $40 billion. And it's raising the UK tax take.
How did they
to
do
the
it?
highest it's ever been, and they did it through employment insurance contributions. If you just go to the website, you can just, and then there's millions of articles that are talking about it now, and you could see sort of the ranking and how exactly they did it. Obviously, they raised taxes across the board. They raised taxes on people who, on inheritance tax, they raised tax on corporation, they raised taxes, and then they do this basically by lowering the threshold in which you meet. So loads of people who weren't paying taxes today might have to pay taxes tomorrow. And it's really incredible. But there's a couple of I'm not going to go into the whole thing, but I think there's a couple of high level pieces that I think are really interesting. One is just the actual number. The aggregate tax take is going to peak out now, according to this budget. Usually it's a 5-year plan. 38.6, which is the highest ever. I think that's one really important. Two is that the Labour Party ran on a platform that they wouldn't raise taxes. And now people are going to say, yeah, that's not quite true. There's thank God for the internet. There's people who've compiled like hundreds of Labour MPs during the campaign saying, we're not going to raise taxes. We're not going to raise taxes. And then right out of the gate, they raised taxes by the most in 30 years. So, I guess if you're going to miss, you might as well really miss big, which is kind of funny. And then the other thing I think that's really important is that I tweeted out a chart the other day about how there's productivity for the non-business sector, e.g. the public sector, and the private sector or business sector, and how for 20 years, the productivity for the non-business or public sector has been flat. And this was after a previous 20 years where it soared, right? So it's not, and for the UK, it's exactly the same thing. So they're basically, in my view, they're putting more money, they're putting good money after bad, which is that they're funding a NHS that needs fundamental reform. They're giving a lot of money they're paying a lot of money to systems that may or may not be fit for purpose. And the reality is capital is mobile. And so a lot of these corporations that feel like they're already getting taxed too much or the burden's too difficult, they'll just simply move to places like Ireland or whatever. And so it'll be a really interesting way. It'll be interesting to see how this shakes out.
So first of all, what I heard was that, how do you know a British politician is lying?
When they open their mouth?
Their lips are moving. So you have that taking
Okay.
place. Yeah. So really what happened here, guys, they came out with a budget and they're spending a lot more money than what they were expected to, and they're raising taxes at the same time.
Right. Oh, I forgot the spending part. Sorry.
And I think this is what we talk all the time. Like, so the challenge in the UK, we have the same challenge here in Canada. And I expect our next budget coming out, you're going to see, we'll quiz Steve on this. Steve, do you think we'll have more spending or less spending?
It's going to be more.
It's more. And their tax is going to be lower or higher?
Well, they're going up.
They're going up, baby. Yeah, absolutely.
Except on new homes.
Well, no, that's on the election. I think we have a budget coming in before then, right? But the point we want to bring this about the UK, because we'd like to share with our audience that don't just look at Canada in isolation. Look at other countries that are similar to us with philosophies and economies and banking systems and everything. And sometimes you can get a clue as to what might happen here. So the British cycle is ahead of ours. The election cycle was a year ahead, basically. And boom, what comes on automatically here, more spending. So the market reaction to that was that the British pound weakened, the stock market went down. Rich mentioned gilts, which is just the British bond market. And I know Rich feels bad for not explaining what a gilt is.
I do.
Yeah.
Carry on.
Gilt.
Oh my God.
This is only Halloween. Wait till Christmas rolls around.
Yeah.
I think though, it's funny. One of the things that the Labour government said over there, they said, we're finally bringing an end to austerity in Britain. So, austerity means that you're controlling your spending and stuff like that. So they're openly admitting we're just going to spend recklessly. It's going, which they already were spending recklessly, by the way, even though it was a different political party in place. So I think also, I expect here in Canada, we're going to run into the same policy. So more spending, more taxes, because you need to do it because we have debt rolling over. And that 400 billion that we borrowed in 2020, at close to 0% or a half a point, that has to be rolled over at a lot more than, a half a point, which means more tax revenue has to go to interest expense on our debt and all that stuff. So it's a good thing to see what happened here. Rich is right. Maybe this will roll over in a couple of days and, markets won't react to it too much. But we could have the same event in Canada. It could also happen in another country, and it just goes, kaboom, in the middle of the night, or boo in the middle of the night. And these are the things that should catch your attention.
I think just one more thing on this thing. I think people are going to come back and say, oh, Rich, you're always against lower taxes, and we should make the rich pay their fair share. The rich already pay, like, the 1% in the UK pays something like 30% of all taxes. And like the top 10% pay something like 80% of all taxes. So like they're at one point, our society needs to come to terms with the fact that we need to increase the productivity of the non-business or public sector. This idea that you can simply tax people to infinity, like what infinity? Why even pay them in the first place? Just tax them 100% of the marginal income, and it'll solve all of our problems. And I'm sorry, it's just not true. We know, because the data is very clear on this, that the productivity in the non-business sector in the UK and in Canada has not increased in 20 years. It's not sustainable. And I think that's what I think a lot of people who are against the budget that taxes and spends and redistributes as well are so furious and annoyed about. It's clearly there is something wrong in which we distribute this money, which Yeah, which will not be solved by the budget that was just released. So
Rich, there's another good example of public sector mismanagement, and that's in Germany, which you've been all over for quite some time. So there's a lot of headlines this week. Volkswagen. Rich, I'd imagine is probably one of the larger employees in Germany.
I would guess. I don't know that, but
they're planning to close. They've never closed a plant in their history. 30% of their plants will close. Entire departments will be laid off, and salaries will be reduced by 18%. That's the announcement from Volkswagen, which again I think is kind of the iconic brand for Germany. And what is that saying about the German economy?
Well, we've talked a lot about their industrial production going down like crazy. It's weighed by the energy heavy or energy intensive industrial production. There's different types of industrial production, some that use more energy than others. And the one that's energy intensive is really, really collapsed. But we've seen capacity utilization fall to basically ex-COVID, like 20-year lows. And it's just across the board. I mean, Germany is no longer competitive in the auto sector, which is why the EU is putting massive tariffs on
and that's
cars.
Because China's basically producing these cars for half the cost,
a fraction of the price, and they're good. That's the thing that people don't like to admit, that the cars are good quality and that people like them and want to buy them. And that's why Germany, in conjunction with the EU, is trying to defend sort of that little trade, in a mercantilist way, is trying to defend their little fief, which is, fair enough. The other thing that's also really important to note is that just a couple of little things to note, which is one is that electric vehicles, for example, have a lot fewer parts than internal combustion engines, and a lot of the middle shaft of all these small companies that are sort of attached to the Volkswagens are also going out of business, because when you basically pivot your entire industrial sort of apparatus to a system that uses less parts, then obviously there's a knock-on effect down the road. And then also these electric vehicles aren't selling as well, and because they're and so they're having to subsidize them with the internal combustion engines that Germany's being sort of forced to get rid of. So all kinds of screwed up things. However, the weird thing about this week is that we've actually had three really good data points out of Germany, which kind of upend this whole narrative. And that's employment growth is really solid, retail sales was really solid, and inflation surprised to the upside. And so I'm kind of confused as to what's going on. You've got an industry and the capex side of the economy that's continuing to sort of suck wind and do really badly. And then you've sort of been released all this data on the consumption side that's done relatively well. And so I think maybe it's just sort of a counter trend, data point that we should ignore, but we'll keep you posted and we'll see what happens. But yeah, it's not looking good for Germany.
I'll solve your confusion, Rich. The Volkswagen data has yet to hit the economy yet. So that's why employment hasn't changed. That's why consumption hasn't changed, all that stuff. Yeah.
Fair enough.
Next. What's up? What's next, Steve?
Next.
That's all I got.
That's it.
That's it.
Want to hear? This tells some scary stories.
You go first.
No, I'm just joking. I'm just messing with you. I'm not going to tell any more stories. Well,
I have one more. I want to give a shout out to Catherine, who emailed me about apparently a usurper on Twitter who's been trying to copy me and say horrible things like oil is bad or other things I wouldn't approve of. So thank you, Catherine, for your email. There you go. That's all. That's my last contribution.
Is that it?
Yeah.
Okay. Well, so guys, we have the US election on Tuesday. So next week's podcast, we could have a lot of things that we're talking about. So, we're not unaware of what's coming up here in a few days. So it'll be interesting to see which way that goes. A lot of people are asking how's that going to affect markets and
yeah,
stuff.
Who are you rooting for, Keith?
I think the markets have already, they've been, trending in one strong direction that the Republicans, could win.
Who are you hoping to win?
I don't vote. I'm a Canadian. The one thing that I find really interesting with politics, everyone's an expert with American politics. And yeah, especially Canadians, of course, because they're so close to us, the Americans are. But yet we're Canadians, we have our own Canadian views, morals, and ethics, and we're using that to judge on how people in another country should vote and feel about things. And I would just say they look at things differently than us.
Step
Hey,
outside your
Hey, look
bubble.
at Brits. Yeah, outside, absolutely. But markets could be a lot more interesting. The world could be, a little bit, could be a little bit more noisy next week, I guess, for the next episode.
Yeah, everyone will be watching. It'll be exciting, I think, either way. So well, I'm sure we'll touch on it briefly next week without getting too much into the politics, because it's kind of a lose-lose, truthfully. But
We have
yeah,
a guest next week,
major-
though. Don't forget.
What's that?
We have a guest next week.
Oh man, who is it?
It's you're gonna make me say his name, but I can't pronounce his last name. He's a professor of economics from Waterloo, and his name is Mikkel Skutterud.
And he'll be coming on to
And,
analyze
he's
the
joining us.
results of the U.S. election.
No, I don't think that's not what he bargained for.
He will be talking about he's been all over Canada's immigration stuff, population growth, the semantics behind that. So he's a pretty even-keeled, level-headed guy. So we'll have him on. But yeah, lots to look forward to. Yeah, big week next week, so we'll be tuning in, and we'll leave it there. As always, guys, we appreciate the support, and we'll see you next week.